Hello everyone, and thanks for checking out our channel, where it's our goal to create a community of informed traders and investors by sharing technical analysis and collaborating together to ace the charts. We look forward to working with you, so let's get started. Looking at SPY on the weekly time frame, and you can see that the bears are in full control as our last weekly lower high is up here at 280.40. We then dumped down to lower lows at 233.76. Anything less than 280.40 on the weekly time frame is just a lower high. So on this bounce, we have met resistance of the 26 period EMA now and the 55 period EMA, and we've started to pull back. Notice that we have found the support of the 12 period exponential moving average right here. However, we have had a bearish cross of the 12 and 26 EMAs, and notice this bounce on the weekly time frame is on declining volume. For the bulls to change the weekly trend, they will need to pull back and set a higher low and then break to a higher high. Keep in mind that there's a possibility that we could fall to lower lows. However, more likely than that, I think, would be that we create an equilibrium pattern of a higher low, lower high, and tighten up. Let's take a look at the daily time frame now. On the daily time frame, you can see that we have had 2 red days now. The top of the bounce here is at 266.98, and we have pulled back to a potential daily higher low at 260.66. Our last higher low of support is 256.41, and then below that 255.50. So the bulls will want to set a higher low somewhere above 256.41 and then break to a higher high. We have had a bullish cross of the 12 and 26 period EMAs, and the bulls will want to maintain those as support. Let's take a look now at the 4-hour chart for more details. On the 4-hour chart, there's a very clear higher low pattern to watch, with our last higher low at 260.01 and below that at 258.73. The high of resistance is at 266.98. The bulls will maintain control of the 4-hour chart as long as they maintain this higher low pattern. The bears will want to break 260.01. If we see a break of the 4-hour support, then we will look for daily consolidation to come next. Let's take a look at the hourly chart now. The bears are in control of the hourly chart with our last lower high at 264.78. We then fell to a lower low at 260.66. So anything on this bounce less than 264.78 is just a lower high. This is the range we will be watching tomorrow, and I'll be looking for a potential equilibrium pattern to play out on the hourly time frame. Let's take a look at XLF now, which is the financial sector. Looking at XLF on the 4-hour chart, and that's the key time frame for me right now, because if we lose the 4-hour support, then we will look for further consolidation on the daily chart. Our last higher low level of support to watch is 25.17. So the bulls will want to maintain that level of support, and the bears will want to break it. We have a potential higher low at 25.45. Let's take a look at XLK now, or the technology sector. XLK on the 4-hour chart, our last higher low is 63.56. We have a potential higher low, a double bottom here at 63.75. So the bulls will want to maintain 63.56 to maintain the 4-hour uptrend, and the bears will want to break that level. Let's take a look now at QQQ, or the NASDAQ 100. QQQ on the 4-hour chart, you can see that it's already lost its 4-hour support. So anything on this little bounce right here less than 163.51 is just a lower high. Let's take a look at IWM, which is the Russell 2000. IWM on the 4-hour chart, we have a double bottom of support at 142.09. We also had an inside bar on consolidation here and a lower open at 143.99, which we broke that level of support. The bears would like to see further consolidation here and a break of this level. If that happens, we will look for further consolidation on the daily chart. Let's take a look at the VIX now, or the Volatility Index. Looking at the VIX on the 4-hour chart, and you can see that our low is at 17.17. We then broke to a higher high at 22.02. So on the 4-hour chart, the VIX bulls will want to set a higher low and then break to a higher high. If we can see that happen on the VIX, we will look for the loss of the 4-hour uptrend in SPY. Let's take a look now at oil. Looking at oil on the daily chart, and you can see that we have pulled back from this resistance level at 54.54. We are still watching the potential for this inverse head and shoulders pattern to play out that we've been looking for. Notice that we have the support of the 12-period EMAs that we are potentially bouncing off of. Let's look at the 4-hour chart. On the 4-hour chart, we have fallen into a downtrend. As you can see, our last lower high is at 53.62. So anything on this bounce less than 53.62 is just a lower high. The bulls will need to change the 4-hour trend in order to head back up to the resistance of 54.54 to see if this inverse head and shoulders pattern can play out. Let's take a look now at natural gas. Natural gas on the weekly time frame, you can see we had a dump and then a nice little bounce. Our low is at 290 and the high of the bounce is at 374. So I'll be watching to see if the bulls can maintain this level of support and possibly form an equilibrium pattern on the weekly time frame. Let's take a look at the daily chart. On the daily chart, you can see that we have fallen to lower lows and lower highs. The bulls will need to change that trend, and the bears will want to break 290. In order to change the trend on the daily chart, the bulls will first need to change it on the hourly chart. Let's take a look at the hourly chart. On the hourly chart, you can see our low down here at 296. So the bulls will need to set a lower high, a higher low, and then break to a higher high to change the trend on the hourly chart. We will then look for a change on the 4-hour and then the daily. Thanks everyone for checking out our channel. If you find these videos helpful, please click the like button and subscribe. Our goal is to reach 1,000 subscribers so we can continue to create more free content. Also, if you are interested in helping us build a community to collaborate together, click the link in the description of this video to sign up. It's free to join, so do it today and let's work together to ace the charts.